Hey guys, welcome. It's July 10th. It's Friday. We're going to be taking a look at, God, I'm forgetting already, market cycles. How they pertain to, either trend trading or mean reversion, reversal, whatever you want to call it, trading. Typically, my rule of thumb is for a market cycle, it's kind of good to know it. If the lower time frame and the higher time frame during the trading day, as I get going with market cycles, I tend to ignore the lower time frames, but it's always good to be aware of one time frame above and below you, and you should be able to check out the higher time frames to help you identify. Here, give me a sec. All attendees are muted. The new freaking version of this software doesn't auto mute anymore. It sucks. Okay, so again, we're going to be going over market cycles and how you can use them with either trend trading or mean reversion trading. The first step is, what is a market cycle? Basically, the markets, whether you're on a 1-minute time frame, which we were, a 5-minute time frame, for the most part, will always be in some type of cycle. Now we can see here, because the Greece announcing that they aren't going to be douchebags anymore, we've got a pretty nice spike up. But as we go into the higher time frames, we'll start seeing the cycles develop again. You probably can't see them, or you might be able to see them, but we're going to take a look at it real quick and see if you can. This is the monthly chart, so this is the granddaddy of all the cycles. Let's zoom in one, and then I'll screenshot it and we'll take it over to Paint. And again, guys, I warned y'all that this is going to be ugly, but I want to show you what the cycle is, and then we'll break it down. So, and let's open it up in Paint. If you have any questions, guys, just type it in to chat during this, and I will pause and answer them, because I don't want to go on if you don't understand what the hell I'm talking about. Okay, so what is a market cycle? And then I'm gonna show it here, and then we're gonna back down on a time frame. Basically, a market cycle, and let's pick an ugly color that will clash. The market moves, and I don't know if you're familiar with it, like an oscilloscope. So markets typically go up and down like this, unless something very dramatic happens in the market, and then we get a move like this. But for the most part, and if something like this happens and you can identify it, then you know to jump into trend trading mode. So not seeing the cycle isn't bad. It's just knowing it helps you control of what type of trading you should be doing for the day. If you're doing range trading with return to median, which the median in this case would be the straight line across here. This is about the median. And again, remember, this is a monthly chart. So if we're looking at this chart, it's a slightly upwards trending monthly chart. And that's our cycles right here. So how do these cycles help us? What the hell do we use them for? One of the things that we're going to do, now that we understand first, everyone understands what a cycle is. It's just a wave that happens. Whether it's on a 1-minute, 5-minute, 15-minute, hour, or monthly, you should always be able to identify a type of wave in the market like this. If you can't, or you don't understand what I'm saying, speak now and I'll break it down a little bit more for you. So if we go back, here's the same chart on monthly. Let's go into the weekly. Now, remember these lines right here, these white lines? So this is 1, 2, 3, 4, 5, 6, 7 candles. And it's the beginning of an upward movement of a cycle. If we go into the weekly, here's the same white line. What do we see? We see 1, 2, we see 3 cycles basically. Now what is it? Before I do it, price is moving upwards, right? So if we keep in mind that price is moving upwards, we have, and I'm going to make this bigger so you can see it, same concept. Price is moving upwards, and let me take a screenshot and we'll draw the cycle on it. Now how does this help you? If you're a trend trader, you'd want to be waiting for the cycle to bottom out and then go up. We'd commonly refer to that as a pullback, but it would tell you then you're safe to be riding price up. If you're a reversal trader or you're looking to get in, you'd be trading down. Let's see. So everyone sees what I see here. There's our monthly. It's moving upwards. If we go to the weekly, can we now see the cycle in the monthly chart? Okay, hopefully we can. Let's go to remind me how to do a screenshot again. I am an idiot. And let's draw the cycle on it. So let's open this one in Paint. Again, guys, remember, Paint, so it's going to be ugly. Yellow, our little pencil, and let's make it a little bit fatter. So here's the cycle that you should be able to identify. And it's a short one up and down. Now, once we do cycles, again, I've done this with some of y'all before. Once we've done cycles, the next video I'm going to do, and it's basically time frame structure, meaning how many candles are in the cycle. We're going to take a look at that later. That's way too complicated for today. So if we now know there's a cycle here, it can help us identify how we want to trade it. So we have an upwards trend. This pertains, guys, down to if you're on a 1 minute chart. What's the difference between this and a trend line? Okay, so here's a trend line. Let me go back to the chart, and I'll show you. What I'm identifying here is the direction and the cycle in it. It's basically creating a channel for us that, well, let's get to your question first. Let me erase this. A trend line tries to identify the tops and bottoms of an upwards or downwards movement. So if I was going to draw a trend line on this, say, and again, this is not going to be perfect, so don't judge me. But if I was drawing a trend lines try and enclose the price like this. Let's see. So a trend line would be the tops and bottoms. All a trend line is an angled support and resistance. What we're doing with cycles is we're trying to identify which way price is moving first, and if it's in a cycle, or here it's not in a cycle, it's just straight dropping. I mean, it was a mess here. If you see something like this, that should key you in immediately, that you identify there is no cycle going on in that. Then you should be able to say, okay, I'm going to trend trade that. Now, if there is a cycle going in, that can help you with what you're doing, if it's mean reversion trading, or if it is trend trading, because you can always either wait on a pullback and then get in on the pullback. Like right here, I'd probably expect, and remember, this is a weekly chart, we'd expect price to drop here and then go back into a pullback and an upward movement. A trend line, all a trend line is your support and resist at an angle. So trend lines are used the same way support and resist are. What we're looking at today is how to identify cycles in markets so that you can determine when to get in and out of a trade. If you're a binary options trader, and I'm going to get into this once we get the concept across. If you're a binary options trader, and what's the majority of y'all do? Do you type in a R for reversion if you take reversal trades, or a T for trend? And let's see, I bet the majority of y'all are reversal traders. So I'm going to show how this applies to reversal trading, and I also will show how it does it for trend trading. And it's actually pullback trading, so it's not really trend trading, it's just taking advantage that you can spot a market cycle. If you can spot a market cycle on a trending market, you can do reversal trading. Okay, this will help y'all if you're doing reversal trading, because if we're on a trend right here, but look down here, here's with the trend, we're going to take this, it's a reversal trade, but it's moving back up. Again, it'll come back down. We expect price to come back down and head back up somewhere. We can expect that because we can now identify that we're from the monthly, we're in an upward cycle. We drop to the weekly, we're going down, we're in an upward cycle. So if you can identify these cycles quickly, and we're going to drop down to lower time frames, but the higher time frames are easy to spot on. We can now say, and remember, if this is a 5-minute chart or a 1-minute chart, we're going to get a lot more of these cycles. If you can identify the cycle, you can identify what type of trading you should be doing for the day. Too many people just jump in with their systems and, hey, I got a freaking up arrow. I don't know. I got an up arrow here. And they just take the trade, not understanding that they're in a cycle. That they would want to wait for the cycle to look like it's moving back up, and they just trade the arrows. There's no issue. I'm not like some other people that say indicators are stupid. Indicators are great. They're going to help you identify everything. But also a little bit of, I guess you would call it price action. Identifying market cycles will help you work with your indicators successfully. Okay, so back to where we were. Did KJ, did you get what the difference is between trend lines and what I'm showing today? All I'm doing when I draw that line is identifying that price is moving up. That from this monthly cycle we know price is moving up. So what I'm going to do is to help y'all see that is I'm going to draw this line. Price is moving up. That's all this is for. I'm not drawing a trend line. I don't want anyone to get confused. So we know price is on an upward cycle on the monthly. Now we drop down to the weekly. Now that we know price is moving up, and okay, now that we know price is moving up, what do we want to identify next? We want to identify if there's cycles going on. There are not always cycles going to be going on. Like I said, right here, there were no cycles going on. And we'll drop down to lower time frames and take a look in a second. I had a message about that. Okay, so now that we know that there's a cycle going on, again, it's identifying the cycle so that we can say what we want to trade given what our system or indicators are showing us. I'm not going to throw indicators on this, guys. I want you to be able to see it like it is. Plus, I'm not advertising anything when I do this, and if I throw indicators on there, it turns into an advertisement for the most part because of everything I use. Okay, so back to paint again. Let's make this ugly. Remember, monthly told us we're on an upward cycle on the monthly. So we jump down to the weekly. Now, in comprehension of this, I could say you could go to a 1 hour, a 30, or a 15, and then compare it to a 5-minute chart if you trade 5 minutes. If you're trading 1 minute, use the 5 minute, the 15, and the 30 to figure out the overall direction and then how you want to trade for the day. Remember, to increase your ITM, you generally, if you can go with the trend, then you're good to go. You're going to do a lot better than you normally would. So again, our cycle that we're going to be looking at, I don't really like yellow, so let's go with something bright, this ugly blue. Our cycle that we're looking at is this. Is that blue visible to y'all? So generally what we're looking at, it's just price is going to go up, down, up, down. If we really want to get into it, it's called accumulation at the bottom, then markup, distribution, markdown, and it's just a cycle that goes over and over and over. I don't just so if you're one of those people that say this guy's an idiot, he doesn't know what he's talking about, it's based on that. There's 4 phases of every cycle. So it's bottom is accumulation, markup, distribution, markdown. I don't really want to get into that because screw it. All we need to be able to do if you're trading is identify bottom. It's moving up, top, moving down. That cycle is going to appear over and over and over again no matter what time frame you're on. Before I move on and we start looking at some lower time frames, does everyone get now what a market cycle is? And then we're going to get into how to use the market cycle, basically. We're going to look at lower time frames because do we have any hour or a week? There really aren't any weekly or monthly bin options out there. So we'll start off moving down on each time frame, and you all can tell me. We'll see if we can get a little feedback on what the market's doing and whether there is a cycle going on that you can identify. Now remember, on the monthly we could identify an upwards movement, and on the weekly we could identify this cycle. As we move down in time frames, we might lose a cycle. Reason being is, as you move down in time frames, inside this game, I'll demonstrate it instead of talking it out. Let me close all these. Don't save, don't save, don't save. No one wants to see that shit again. Okay, so for instance, let's take a look at how we can lose a cycle. We're on a monthly chart right now, and we have one single red candle. So if we jump down to a 5 minute, this whole screen here probably encompasses just part of that one little red candle down. So if you jump too far on time frames, if you go to monthly and say, okay, we're in an upward, and then you jump down to the 5 minute, you're not going to be able to correlate the two. It will make no damn sense. So you need to adjust your time frames to your time frame that you're trading. You need to use something around it. So we have can anyone see anything forming here? Do we see a cycle on the 5 minute? Can anyone tell me what it's doing? First, we want to identify, is it a range or is it trending up or down? And I'll draw the line. And we're going to take a look and pretend that you're trading on the 1 minute chart. And where you're going to use the 5 minute to help base your decision on how you're going to trade for the day on a 1 minute chart. So, anyone got a concept, clue, anything about what we would be looking at here for this current price action or how the current market conditions are? Okay, so the first thing we do is we can see price is now going down. Yep, so we had a movement up with a little bit of a cycle in it, but mainly, like I said, since Greece came out, this is going to look funny. Greece finally bowed down and says, yes, we're going to do what y'all want. We wasted 6 months of your life. Thank you. Give us the money. And then they shit on the euro and ran out. Okay, so we can see that price is moving downwards. Can we see a cycle here? Let me bring it up on the nastiness. Man, I am just so not doing well today with this. Open it up in Paint. We can see somewhat of a cycle here. So let's go with, I guess, yellow again. We'll do pink this time. Who cares? Cycle. Ooh, not big enough. Okay, so our cycle here, it's small, but you can notice it. So what would we be expecting is price to move somewhat like this until we see a change in either trend or the trend flattening out to a range or consolidation. So knowing that now we're on the 5 minute, and remember, we're going to bump down to a 1 minute chart to take a look at how we could trade this. What information can we pull from this 5 minute chart? Is that if you're taking a trade and you want to you want to be on, I guess you want statistics to be on your side. You want the trend to be on your side, is we would be looking for puts. Calls, in this case, maybe, but a put is going to be much easier because your chances of the overall trend on the 5 minute chart dragging it down. Now, just so we can remember, if we look at this chart, we're on a 5 minute chart with a downward trend. When we were up here, what was our trend here? We're in an overall upwards, but when we jump to the 5 minutes, we're in a downwards. Remember that the market, and I'll show that in the market cycles. Just because a monthly says up, your 5 minute can say the opposite. Just because your 5 minute says down, your 1 minute could say the opposite if it's in this portion of the cycle, the upwards portion of the cycle. And when I say that, let's say we happen to look at the 1 minute in a little bit, what we should see is the 1 minute in an upward cycle while the 5 minutes finishing up its downward cycle. The 1 minute's going to start showing signs of an upward cycle before the 5 minute does, really. And then you should see it. Let me remove this. Let's look at the 1 minute chart real quick. So we're going to leave this line in here because we're on a 5 minute chart, and a lot of you trade 60 seconds or 1 minute charts. So with this on here, how does it correlate to a 1 minute chart and help you out to make decisions? So this is the same exact chart. This is the same line. Remember, this is not a trend line. I'm just trying to make it obvious for you what price is doing. Now, what I say here is, if now, let's say you're an indicator-based trader, and what would be the smartest move here when you're trading these is to take the downward moving trend, the downward moving, when the cycle is moving downwards. Why? Because one time frame above, hell, even 2 time frames above, we're showing a downwards trend. Trading against the trend, if you're really skilled, can be done, but just by identifying this and using it as a cycle, we should know. Now look at what we have here. We have our first green candle. Does that mean we're going to jump in? Let's take a look at the 1 minute. Can we see the cycle? From this chart here, here's our 5 minute. If we jump to the 1 minute, by thinking of this in cycles, does anyone think the 1 minute now is an upward movement? Let's take a look at it if we drew it on here. And again, this doesn't always work, but the more you do it and the more you keep it in your mind, it will help you as a technical trader, even a price action trader. Let's open up Nasty Paint again. So we know we're in a downward movement. Again, this is not a trend line. This is just me showing you the downward movement. Let's get into drawing what we think the cycle might be. So our cycle, and this is after the fact, guys, so it is easy to identify a cycle after the fact. Remember, this is what's right here. So let's say you're using overbought, oversold, and we have a little blip in here, and then it goes down, and then we have up. So is this pretty? No. And I don't mean my drawing. Is the cycle pretty? No. But is it matching overall what we think the market should be doing? The market should be heading down Yes, so it is following our downward trend. I'm not going to get too much into what I actually see here, but for the purpose of this, if it went overbought, oversold here, in this area right here, and you were watching based off of this, our 5-minute chart, and again, like I said, this is not perfect, we're doing this live. If we were watching this on the 5-minute chart, we'd be expecting an upward movement. Now, since we're getting lower lows and lower highs, let's talk a little bit price action, but not get too much into it. In order for this cycle to complete, since we're moving downwards, where do you think price would have to go before our next cycle starts? I'm going to draw a couple lines and explain it. And that's not the type of line I want. So when we're watching cycles, and then let me just do a screenshot and I'll draw it nasty again. This one here, I would not expect it to be moving up yet. Why? Because it hasn't gone here, so it hasn't completed its cycle yet. Let's capture the window. And I'll show how I'm seeing what a cycle is and where I'd start looking for an upward movement and when to get it into a trade. If I was going to do a pullback trade. Now, if I was doing with the trend, we'll look at that too. But let me get the cycle thing finished up here. If I could do this. God, I'm such a mess. Okay, so here's 1-minute chart. 5-minute showed us we're heading downwards. Now, here is our 5-minute chart. When do we want to start looking at the 1-minute chart to get entry? 1 minute, obviously, if you're using it, it's going to probably highlight better entry for you than that. If I don't like the pink, let's go back to blue. Okay, so our first movement's here, and then it cycles up. Now, for me, when I have a trend, I prefer to do pullback trades on it. But it depends on how you want to trade, so we're going to try and identify both. So first, let's get our cycle in. Now, what do we see here? Here is the downward movement, and this is our cycle moving up. Our second cycle comes here, and this would actually be a support or resist. It stalls out a little bit. We get that green candle, and it moves down again, and it moves up. So if, let's say, we were going to do a pullback trade, where our point of interest is right here. Why is it right here? Is because typically as cycles move, we want it to bring, and this would be going to like a swing high, swing low. We would want price to close somewhere down here, and then we would be expecting price to move back up. So knowing that, if we go to the 1-minute chart, remember here's our blue line. And this isn't always going to work out, but if you're using a technical system and it tells you you have a trade here and it's close to where it should be, which for me this would be anything below this, and I got a, let's say, an indication that price is going to move up, I might jump in. What it does look like we have happening is on the 1-minute chart, which would help you identify it beforehand, is it looks like we may have a small range starting to form. So our trend is dying out and we're moving into a range, which US opens right now, so we might see a change in the sentiment of this. But let's see, here's 5-minute. Again, this is our cycle. Our cycle's flattening out. So if we jump to the 1-minute, I'm sorry, this is the 1 minute. On the 1 minute, we can see clearly that the cycle is starting to flattening out. 5 minutes, it still got down, but the 1 minute's cooling us in. Do we see how, if you're looking at the cycle and you're adjusting time frames, how it can help you? What I'm trying to show, guys, is how to read the cycles to help you, because how many here are just plain price action traders, and how many of you are indicator traders, technical traders, if you want to call it that? How many of you are indicator junkies, or rely on indicators to tell you when to get into a trade for the most part, or at least to identify a potential trade? If you can understand something as simple as a market cycle, it'll help you it will help you identify when those indicators are going to work and the best way to use the indicators. Let's take a look at another chart real quick. See if we got anything that's usable. This is a monthly on AUD USD. Right now it's a mess heading down, so this is the 1 minute. Let's start off with monthly. Again, guys, your cycles are not always going to be to the point where you can see them. If not, that's when you want to trade with caution. When I can't see a cycle and I zoom through all time frames, that's what I consider the market's out of sync. And I will use smaller trade sizes. I'll drop down to 1 to 3%. So let's just going through this real quick. We could see on this is the monthly chart, nothing spectacular to see as for a cycle. So let's bump down to the weekly and see if we can identify. This one's creating lower lows, and we do have somewhat of a small cycles here. But is it anything spectacular? No. Let's jump to the daily, and let's bump it up a little. Daily, and let's draw what I see, if I draw the right line. Daily, we have a ranging, and you can see the cycle here. But we're heading into a downward here, and then probably an upwards here. Still nothing for me. Let's go to the 4-hour chart. You can see some definite cycles here, but let's look at the current market conditions. Is it any help for us? We had a big drop. And now there's a little here, little here, little here. So we're ranging here, and we are cycling. Still not into where we'd want to be for anything useful. Here's the 1-hour chart. You can see the cycle here. It's nothing useful. What I'm doing is I'm backing down. This gives me this is basically what I do in the mornings. I look and see. We're on the 1-hour chart with a heavy drop here. So what can we expect as a technical trader? Let's look at this candle and then jump into the 5-minute. For the last hour, it's been dropping like a rock. 1 hour dropping like a rock. What do we have here that could stop it? And I know this is getting a little weird. Around this area here, we've got support or resistance kicking in, so that should, if it continues to range, although with the, again, we have grease kicking off, so this is going to be a little bit hard to determine what it does. But our cycle's here. It was slightly moving upwards. What I'm looking at is I see the cycle slightly upwards, but this candle kind of blows it out. So for me, that would be a pause. This whole area here would be a good time to trade. This for me is a pause to wait because my cycle is not matching up. If we go to the M30, let's take a look at it again with what I have drawn on here. Our cycle becomes a little clearer on the M30 of what's going on. This does not match up with the cycle. So that is a warning if you're a technical trader. You might want to pause and wait till you can see the cycle again, or at least something makes sense. Because this drop right here, it's not typical of what should be going on the chart. Most likely it's grease related, so we know why that's happening. We don't have to be too worried about it. M30, let's drop down to the M15. We're getting into the range where most of y'all trade on the 1, 5-minute, or 15-minute charts. 15-minute charts, again, we still have upward movement, and we can see our cycle. Now let's get into where we would be trading. So here's the 5-minute chart. The line that I drew on the hourly is still holding correct. You could think of it as an EMA, a longer term, like a 240, or you could just keep it simple and not give a shit and just draw a line on what you see, and as long as it's holding true for what you want to trade. So when I went all the way out to the hourly, I saw we had an upward movement. This looked odd, so I pause, and I just start dropping down time frame by time frame. Check my cycles. Cycle's broken here, and it looks like hell. M15, same thing. We can see that it had cycles, but whatever this movement was knocked our cycle out. So basically we want to stop and wait to see if we can see a new cycle form. M5, we had our cycle. But, looks like crap now. And this is the M1 where a lot of you would trade. Now, from the M5 to the M1, we know that there's a spike down, so I wouldn't typically take this. But just for, I guess you could say, education, let's take a look at how you would do it. Actually, let's look at another chart and see if I can find a proper one. Okay, this is UJ, and we're going to take a look at it. We'll start off, because monthly doesn't pertain too much. Monthly, we got a doji, but let's drop down to the H1. H1, we can see price is moving up. So I'm going to do my thought process, and I'm going to change it up as I go. Okay, so H1, I'm going to say we have an upward moving trend. Now I'm going to start drilling down in there, looking for the cycles, and to see when it either goes against this, or if this direction is what is going to be controlling how I trade for the day. So if we drop down to M30, you can see a little bit. Here's our upward movement. consolidation, upwards, pullback, upwards, pullback, upwards, small pullback, upwards. Again, probably next week I'm going to cover this to this to this. This is it's I'm going to be basically showing a Ken Chow system, not system, but how he thinks and how these are basically they're called superstructures and related to time to show that the upward trend is actually weakening. Okay, but back to where we were. 1 hour, we say we have an upward trend. M30, we can start to see the cycles there, and we have an upward trend. So as I'm drilling down to my 5-minute chart that I trade, I know I want to be going with calls mostly, and I want to see if I can find some structure on the 15, the M5, or the M1 to support that. As we get into the 15, can we see the cycle here? Cycle got ugly there with consolidation and moved up. Now, looking for calls only, because we know we have an upward trend, anytime price went, and I'm going to use something that everyone uses, if price went overbought here, here, here again, and this was probably our last identifiable one. And again, this is not a trend line. I'm just showing that I'm working with an upwards trend. Would I want to trade these? Not really. I'd be looking for entries somewhere along these lines. Reason being is because we have from the 1 hour down, we have a strong upwards trend. So why fight it? If your technical system or however you trade is giving you signals on the top side, maybe take them, but go 1%. You could go a little bit heavier here because the trend should just pull price back up. Do we all see the cycles there and the logic behind this? Because a lot of people, the reason I'm doing this one, a lot of people get their system, they get it spanking new out of the box, they get it download it from the forums, install it, and they have no freaking clue what to do with it. They're just trading all over the place. They'll be getting arrows, I don't know, I'm not drawing these for any particular reason. They'll be getting arrows all over the place on the top. So we have arrows everywhere. These are riskier trades than if we have an arrow pointing up. I'm not getting into systems, I'm just saying if you use it and you have a signal and your technical system does not say trend or no trend, it just says requirements met. So that's your chance as a trader to jump in with your knowledge that you can use and say, well, it's telling me to take a trade down, but the trend's up, so no, I'm going to ignore it. Now, on the other hand, let's zoom in a bit, and let's say you get, for some reason, your system fires off an upwards trade, I don't know, here, and we're doing, I'm trying to think of a good place to put it that makes absolutely no sense. Like here, we can see consolidation forming. Would we want to jump in, or would we say, hey, that's kind of stupid because it doesn't match my market cycle? We're looking for an upwards and downwards, upward, down, upward, and down. If your indicator fires off and it doesn't match the market cycle you've identified, then you know to ignore the freaking indicator. Does that make sense? And is everyone kind of getting what I'm showing on how just something as simple as identifying a market cycle can help you out with your technical trading? Because if you ignore the markets, your technical system, no matter how good it is going to fail. So the first step of the day, and like I'm doing, start off here, 1 hour, we upward trend. So let's drill down to how I'm going to be trading. M30 still holds true. I'm looking for calls. M15 still holds true. I'm looking for calls. M5 where I trade on a daily. Now I drew these blue boxes on a 15-minute time frame. For the most part, look at where they are. They're holding true that I could have gotten in here if my indicator gave me anything. So on a 15-minute chart, and I know this is after the fact, but the concept should hold true for you. I drew these on a 15-minute. Now when I jump down to the 5-minute, all it's saying is, yes, your theory is correct. That if I'm taking calls and I got an indicator alert in these areas, I should do well for the day. If you identify your areas on the 15 and you jump to the 5-minute and this shit don't make no sense, then you probably want to take a look again. All I'm doing is showing you how to identify market conditions using market cycles to back up your indicators. So if you can back up your indicators with market cycles or identify market conditions, you think your ITM is probably going to go up because now we're not playing stupid. We're trading with the market and we're using our indicators to help identify our entry. If you do that on a daily basis and you get used to it, I guarantee your ITM percentage is going to go up. Then all you need to do is worry about money management. So here's the 5-minute. Let's jump down. Let's say you're a 1-minute trader. Now we identified these areas on the 15-minute. Let's jump straight down to the 1, and we'll zoom out a little bit and see what it looks like. That's zooming out quite a bit. So even on the 1-minute time frame, I drew it kind of big here, but what we're looking at, 1-minute time frame, these are identifying as nice areas that you should be able to get into a trade. Market cycle, let's take a look. We're on the 1-minute. And remember, we started on the 1 hour, and we've drilled all the way down to the 1 minute to back up how we're going to trade for the day. Can we all see the market cycle here? If not, let's do the ugliness. And this is going from a 1 hour down to, like I said, a 1 minute chart. Didn't take me I'm explaining how I do this, and what it took me less than 5 or 10 minutes to decide that this is how I'm going to trade the chart today, and this is how I'm going to use my indicators. So let's do it. Capture window. Are your market cycles always going to be pretty? No. But can you identify them as you get better and better at it? Yes. And will it help your indicators then? Yes, because you're going to say, well, that indicator makes sense, or that trade does make sense. Let me get in it. I'll open up for Q&A here in a second. Let's just draw our last little cycles and see what we got. Okay, so we're on an upward trend. Again, our cycle is going to be pretty? No. And see, you expect it to go down there, but nope, it's going up, down, up. Okay, so I'm going to do one ugly drawing to sum up cycles. So let's go to File and New, and close your eyes if you're not ready for this. Okay, so I'm going to use purple as a monthly. Typically, our monthly isn't going to be that volatile. That's why when people say trading the smaller time frames is harder, it's not as accurate, I call bullshit on that. It's not that it's not as accurate, you just need to know the cycle of what you're trading compared to other cycles. Okay, so purple is monthly. Let's jump down to hourly. We'll do hourly as blue. Oh, sorry, I'm crunching my cough drop in your ear. Remember your cycles, and they're not going to always be pretty. I say that because I can't draw for shit. But the hourly cycle will follow the monthly cycle when the two coincide. So if, let's say for right here is what we're talking about, and then I'm going to draw in a 5-minute to wrap this up. Our monthly is down, and our hourly is down. So in that case, we'd be looking for puts. So how can we reinforce that even more? Let's go to red. We'll consider this the 5-minute. I'm going to try and draw this. The 5-minute follows the hourly. And other than world economic events, you're always going to have cycles. So let's hurry up and get this blah, 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 blah. So we can get up to our part here. Okay, so now remember we said this is our area of interest right here. Okay, I'm not going to finish that up. So our area of interest on how to use the 3 different time frames, and hopefully this will make it crystal clear. What did I say? Purple is monthly, so it's on a downward trend here. Blue is hourly, it's on a downward trend here. And then we have red, the 5-minute. And I know this is a little bit probably screwed up, and you're thinking this guy's nuts. Downtrend. If we can combine the market cycles together, do you think taking a call in this little area right here, if we were trading right here, a call or a put in this area, we'd be looking for puts. Why? Because we have 3 market cycles lining up. That's why when I trade, I wouldn't take any calls during this area, or if I did, it would have to be one hell of a set of confluence. I mean, I'd have to have like a monthly pivot, a weekly pivot, a daily FIBO. I'd have to have the world lined up for a pullback on this. Because if we're doing 5-minute, hour, and monthly all saying that the market's going down on a cycle together, we don't ignore it. That's when I say the market's in sync. If we can get 3 or 4 cycles together, the market's in sync, and roll with it. You will do so much better when you trade when the market's in sync. ITM percentage will definitely skyrocket. So if you're borderline and not making it, but your indicator someday works great, and some days it fails you, Yes, it would. It's look if you're trading, I highly recommend pre-trading prep for anyone. That is just simply and like let's take a look real quick. I'll do a pre-trading prep here. Monthly, we don't need it because I'm on the 5-minute charts. So this is the H1 of what chart is this? US CAD. This is the freaking pair I hate the most in the world. So real quick, I'm gonna just talk you through what I'm looking at here, what I see, and I'll draw lines to try and do it. Every morning, this is what I do. Whether you're using any type of indicator or system, I highly recommend doing this. First, you just need to know what the hell the market's doing. Slightly downward, but we've got a big spike up. So what do I see? I see slightly downward, big spike up. This is not a trend line. I'm just identifying which way it's going. It's kind of like using an EMA. You can throw an EMA on there if you want, but I don't like having EMAs on my chart. So I can see now from the 1 hour, slightly downward, spike up. Let's see what else. M30, we got the cycles in there. Here's the up, down, up, down. We're in a range here. So for me, number one, identify I'm in a range, so that's a go for the type of reversal mean trading I do, because this is my mean now. Here's my mean. Price is going to go up and above, but it's going to always come back to this. This here worries me. And again, I'm just doing this full speed on what I'm thinking about. So far, this has been a great chart up until here. This worries me, but up around this area, it should reverse and go back down. If it doesn't, that's a freaking warning not to trade this shit until it does calm down and go back into a cycle. Let's drill down a little bit more. The mean line is the center. Mean is what price is going to return to. Let's look at from the hourly. See the mean line here on the hourly. Mean line, I have not moved anything. It's still holding strong on the 30-minute, 15-minute. Mean line is still there. It's still holding strong, saying that price is coming back to this. I'm at the 15-minute chart of what I just drew off a 1 hour chart. Slightly downward. That slightly downward is becoming more pronounced. So, to be on the safe side, what kind of trades would I be looking to take if I go to the 5-minute to be safe? Based off of what I've seen so far. Am I going to be looking for calls or puts? This thing is almost flat, but if we're an extremely conservative trader, do we want calls or puts right now? We're downward trending a tiny bit. Calls or puts? Y'all pick. And the line that I'm drawing is just so you can see what's going through my head. You don't have to have it there. You can draw it there. Yes, if you're extremely conservative, although this is an excellent for just about any type of mean reversal system that uses overbought, oversold, these are some excellent freaking charts. UCAD, I hate to say it, looks lovely today for reversals, but slightly downwards if you want to be conservative, and we'd be looking for puts. Let's jump to the 5-minute, see does it still hold true. 5-minute, we can see this move out is just screwing everything up, but we have our cycle. Median is still holding true. From a 1 hour where I drew this line to the 5-minute, I'm still seeing the exact same thing except for this spike out. Most likely this is the US Open. The sentiment's changing, and we know how the US market can suck some days. Do we see how what I saw in the 1 hour translates down to a safe day on the 5-minute up until where? This point here, it went unsafe to trade. You most likely would have lost a trade on this candle as price spiked out. Let's go to the 1-minute just for the hell of it. Let me zoom out a bit so we can see if that median line holds true. 1-minute chart, the line we draw on the hour still holds true that this is where price is coming back to, right around here. So does everyone see how just something as simple as that, and I did that in what, 5 minutes and answered a question? That this 1 hour line tells us going down to the 5-minute whether we're going to have a good day or not and what to trade. And then we saw a danger zone sprout. And like I said, most likely some people would have taken a trade here and bombed out and lost, but that should have been our warning now to sit and wait. If you don't trade the US Open, which is like a smart person would do, I don't trade US Open because we typically will see a change in sentiment, which means the market's going to freaking change. US Open is bad to trade. I sit around, give it about 15 minutes, see if anything wonky is going to happen. Okay, so any questions on market cycles, how to identify them, and drill down once you can. Market cycle, up, down, up, down. We have the cycle, so we draw a median. We get our median, drill down from there. Does it agree with what's on our charts currently so that we can have a good day trading? By using that information, we can pick whether we want to do puts or calls and what we're going to put more money into. 1%, 3%, 5%. Pretty clear for everyone? Does anyone want any more examples? Does anyone have any questions? completely open, guys, just go for it. I highly recommend doing this on each chart per day. You don't even need to drew all this shit on there. Once it's done, write down on your piece of paper. Yes, I do computer trading, but I have a little notebook like you see on the old-fashioned police shows that I buy at the dollar store. And I write down what I think of each chart for the day. So US CAD for me is ranging, warning now, but I'd be higher percentage puts, lower percentage calls. This thing's almost flat enough, though, where who cares? UJ, what are we looking for? Looking for calls trending up. That would be on my little notepad. AUD USD. Let's go out to the hourly and see if anyone... Well, shit, it's already there. Euro USD. Let's remove the cog. Okay, so this is Euro USD. This is the monthly. Let's jump down to an hourly and pretend we're doing it. Somebody, as soon as they can see the chart, can they tell me what... Now, this one is a good one because it's not perfect. Okay, so here's Euro USD. What would we do first? What is the market doing? Step 1, trend, range, consolidation. And this is overall. We're just looking for the big picture to help us get in. Trend, up or down? Up. Okay, great. So what do we do? Now this, you don't have to draw this on the chart, but if it helps you, great. Draw a line. Dead down the middle of where it is. It doesn't have to be perfect. Okay, so we've identified it's trending. It's going upwards. We're getting higher highs, lower as it goes up. So now let's start our drill down. M30. Is it still holding true, and can we see any cycles? Not too pretty, but it is holding true. Does our median here hold true? Is price coming back to this red line that we drew? Yes, it is. So let's drill down a little bit more. Still would be looking for calls if we're conservatively trading. This is M15. Let's zoom out a bit for it. M15. Now remember, hourly line. Is M15 still holding true? Is this our median? Is price coming down to it? What do we expect price to do? Come back down to here, then go back up. Because we're identifying kind of an ugly cycle. So now we're getting into where a lot of you would trade, the 5-minute chart. Here's our median. Price is still going in and out of it. As we get in, we might need to adjust a little bit. We could say again that maybe this is it. But let's keep it simple for now. But that's what would go through my head immediately, that maybe this is the jump up and there's a new one. I don't want to get this too complicated for you, so let's remove that. 5-minute, we're on an overall, so calls would be better than puts because we're on an upward trend. Puts, lower. Would I take a put? Yes, if I have a good setup, but I'd probably go lower on the money management, maybe a 1-3%, and calls I could probably squiggle out of 5% if I get a good setup. So all I'm doing is identifying my indicators. Whatever you have, your arrow, your magical circle, whatever the hell it is we're saying, if I get my magic indicator to pop, I'm looking for a call. I would prefer a call over a put. Let's drop down to 1 minute. So on the 1 minute, the area that I drew, remember how I said this could possibly be a shift in the median? That could be a shift in the median there forming, or price could come back down here. But you see how we drilled in it, and just from what we learned from the hourly, when we got to 5 minute, things aren't quite making sense yet. So what could we do? We could say from 15 minute, there it is. It looks like consolidation to me, flat. 5 minute, I would say consolidation flat. So we could actually say this is our median now. And if we went to 1 minute, does that make sense? That's our median. You see how I no longer used a trend line? We're in a range here. So we could use this. That's our median. Where's price going to go? It's going to return. What does it look like? If I'm looking at this on the 1 minute because of the market cycles, I'm already seeing this now. Price is moving down, and I have a cycle there. You see how you can use your charts to make sense of your indicators. If you can identify these cycles, it's upward, downward, pull back, move up, pull back, move up. Everyone get what I'm trying to point out here, and how if you can be aware of the cycles on your chart, be aware of what it's doing, and then use it with your indicators, you're going to do a lot better. Most likely, at the end of a cycle is where you're going to lose a trade, because you don't know when the end of these cycles are going to happen. So you expect that loss to come in, because at the end of a cycle, that's where you're going to get your hint. When you lose your trade and a cycle's broken, that's where you're going to get your hint. You're not going to, unless you're lucky or psychic, you're not going to know when a cycle ends. Because let's take a look. We had 3 cycles that were... Actually, we have 4 cycles that we can see on this screen. We have a slightly moving up one here. Here's consolidation in this area. This is a weird area. We would have lost a trade coming here because we have expected an upward. We also have another cycle that's here. So cycle here, flat, got ugly, and then we have cycle here, and then cycle down. This is all off the 1 minute chart, but see how it can help your indicators. Just jump there, take a look. You don't have to draw all these fancy lines. If the lines help you, draw them. If they don't, you should be able to eventually just spot these things by jumping to a chart, taking a look at it for 30 seconds, and it will help you to decide if your indicators are giving you the right information, and even if they're saying trade, whether the trade makes sense or not. So guys, that pretty much sums it up. Are there any questions at all on market cycles and how to use them with your technical indicators to help improve your ITM, OTM percentage? How many times can last one cycle? A cycle could go, I mean, there is no time. A cycle can be, here we see monthly cycles. Each one of these candles is 1 month. 1, 2, 3, 4. But remember, inside each candle is another cycle. Here's a monthly. So look at, just for an example, we are just looking at it. Here's a green candle on the monthly. What's inside this green candle when we drop to the M1? This is all inside that candle. And here's our cycles. So there's not a set time frame on the cycle. You just have to watch it and watch for the patterns. Cycles can be identified by, for instance, what do we see here? Consolidation. Not consolidation, ranging. Now, if we were trading this, and again, this would probably be a trade that you lost on that could identify the price went up again and it broke its cycle, but it actually just went a little bit outside and came back down. But we see a change in the cycle from a ranging to a slightly downward trending. You're gonna, again, most people are gonna lose their trades when the cycle changes. That's just an inevitable part of life. It's learning to recognize the market conditions changing so that you can adjust with your indicators. Expiry times for BO using market cycles. That's entirely up to you. If you trade the, we started on some of these using a 1 hour chart and drilled down. I trade the 5 minutes, so my expiry times for this is the same thing. If I get a, here, when I trade the 5 minute charts, I'm looking for about a 5 minute expiry. So let's say I could identify this as a trade. It's a 5 minute expiry. Some people feel more confident going to a 15 minute or 10 minute, whatever. The expire for you is, it's basically for you to learn. If you're not comfortable with a 5 minute, bump up to a 15 minute. I can't really tell you which expiry to use. I can tell you what works for me as a 5 minute chart, 5 minute expiry. A lot of people like to compare the 5 minute chart, and when they see that this is forming, they will jump to the 1 minute. Now, if I would have taken a 5 minute here, 1, 2, 3, 4, 5, I probably would have lost, because that was my entry that I identified on the 5 minute. That was the exact entry I. But if you're looking at a 1 minute, you could have probably here and then taken a 5 minute trade up. Expiry time is going to be completely up to you. What I'm just trying to show is how when that indicator pops and it gives you an alert, if you can identify the market cycle, that indicator alert should make sense. It shouldn't come out of nowhere, and you should understand why that arrow popped, and you should be able to say, you know what, that's a good arrow, let me take it. Or you can say, that's a stupid ass signal, I'm going to ignore it. It doesn't match with what's going on with the market. Any other questions? Whatever it might be. The momentum of the angle of the candle can advise us that the cycle is almost over. Depends. I mean, the market's random, remember that. Right now we just had US Open. So what happened during US Open? Let's see, we had US Open 30 minutes ago. 5, 10, 15, 25, 30. US Open was here. What did price do? It started moving back upwards. We were on a sharp downwards. Momentum was building downwards slightly on a 5 minute chart. US Open, it reversed. Momentum's good on higher time frames. On the shorter time frames, not as much. Remember, momentum on a shorter time frame, it's like throwing a snowball down a 2-foot hill. There's not much time for you to see the momentum developing. Now, if you're on a 1 hour chart, it's like throwing a snowball down a 30-foot hill. It gives you more time to see that the momentum's building. That's my opinion. Some of you might use momentum. But if you get down to the 1 minute time frame, it's like I say, it's like throwing a snowball down a 1 foot hill. You're not going to see shit. It's just poop, done. Any other questions? Again, expect if you're using cycles, it'll help you identify too why you go back and review the trades for the day, mark it, and it'll help you identify why your system lost. If it's losing on a market on a cycle change, that's a good thing. But other than that, it doesn't seem like there's any more questions. If there is, type it in real quick. Otherwise, we are done, and it is Friday, 9 o'clock, so I am done. Hope y'all enjoyed. I will try, hopefully, for next week for the structure of the trading, because we can take a look at the structure of how these are formed to give us a lot of clues, too, on strengthening or weakening of a trend and when that cycle could possibly end. But that's going to be a little more difficult. But thanks for coming, guys. Enjoy the webinar. Hope you have a great day and enjoy your weekend.